Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Now, what we saw in the last week was very volatile trading sessions, especially the last two trading sessions which we saw. And we saw a very sharp fall and then a sudden pullback. Before I go ahead with my analysis this week, I would just like to put forth a context like what I'd shared in my previous video and how did the market react according to that. If you remember, I guess I shared a video somewhere over here when markets had collapsed till 22,100. And that point of time, I clearly told that we might see some sort of pullback because this was a pretty sharp fall from 22,740 till 22,100. So almost a 650 points fall, and which happened very fast. And after that, we also saw a pullback. But when I shared this video, I clearly told that it will be very interesting to see that whether this pullback goes all the way up, closes this gap of 22,500 and 22,428, or we'll see another sell-off. And what happened over here was the sell-off continued. When this sell-off continued, we saw one more thing. We had lower low in price and higher low in RSI. And due to this, we had a positive divergence and we saw a sudden pullback. So far, so good that markets have been giving us small pullbacks every now and then, and they're not continuously correcting from this point onwards. Fine. But what we can also witness is that there has been a sharp rise in volatility. Like the average movement of Nifty in an hour used to be somewhere around 50 to 55 points, which has doubled up, and we can see in one single hour, it'll be very much easy for Nifty to move by 100 points or maybe 105 points. Now, if you go back to the daily time frame chart, okay, and if you just have a look over here, somewhere over here we have a 23.6% Fibonacci retracement, which is at 21,900, and there is also one small trend line support. If you can check this, this is a small trend line support where prices did fall below this particular trend line on Friday, but on closing basis, they closed above the trend line. That means this particular probable trend line and this low and this Fibonacci retracement, these three things came together and pushed Nifty higher. Now, if Nifty wants to go higher, first thing what we need to understand it needs to consolidate a bit more. Why? Because if Nifty wants to rally further, I always say that stable rallies, long-lasting rallies generally are born when volatility is very low. And over here, the volatility has doubled up. So first thing is we need a slowdown of the price movement. We need a slowdown of the volatility, and even the trend, even if it goes up, even if the price goes up, it should go up slowly. And a proper breakout, if you want, in Nifty, then it will only happen above 22,500. If we have a positive candle closing above 22,500. Now, this might seem pretty much strange to you that currently we are at 22,100, 150, and from there we need to move another 350 points higher, and only then we'll have a breakout. So we need to understand one thing, that this gap is not just visible in the hourly time frame chart, but it is also visible in weekly time frame chart. So gaps in weekly time frame charts are very important. And if you just check the price movement in last 2 days, what happened over here? We have an upper wick and a very sharp sell-off, and then suddenly we have a lower wick, and then we have a very large green candle. Similarly, if you just try to understand what has happened in the weekly time frame chart, we have a shooting star, and then we have a big hammer. And along with this, we have a hanging man, not a hammer. And along with this, if I convert this chart into a line chart, we also have a negative divergence. So we need to understand that there are so many mixed signals available on the daily, hourly, and on the weekly time frame charts. So first thing is very, very important. If you want to go further up, we need the volatility to contract. We need the volatility to come down, and a proper breakout above 22,500 will probably convert into a proper strong uptrend, which might test the recent all-time high and maybe even go above than that. But anything before than that is very, very premature as of now. If there is any further development, I will always share with you in my next video. Now, going ahead in the Bank Nifty, I clearly told all of you that Bank Nifty looks more stronger, more stable in comparison to Nifty. So if you check Nifty, Nifty has come all the way down to its previous low in the daily time frame chart. It has not tested that low, but it is almost close to it. But if you check, Bank Nifty is pretty much far away. So this time, yes, even by coming down, Bank Nifty has surely outperformed. And I would say special thanks to HDFC Bank, which gave us a proper up move in the last, I guess, 16th of April and 19th of April, due to which Bank Nifty stabilized a little bit. Okay. Now, talking about Bank Nifty, even if you have a look at the early time frame charts, we have seen a fair bit of increment in volatility, where Bank Nifty used to move around 151 points in an hour is now easily moving 250 points in an hour. So again, over here, we need some sort of reduction in volatility, and only then we will be able to see some sort of up move continuing on the upside. Now, going ahead, if you have a look at the PSU banking pack, in PSU banking pack, what we can see is in the weekly time frame chart, price is just going sideways. 3 days, 3 weeks up move, 2 weeks down move, and then we again have a candle with a lower wick. So more or less, this is consolidating. If it doesn't break this low, if it doesn't break this particular previous low over here, and if we just keep on consolidating that, then yes, we could have some short-term momentum trades, some swing trades on the upside, but your stock selection has to be pretty much bang on. So first stock which you can have a look at is Canara Bank. As of now, it's not that interesting, but if we have a breakout in the shorter term hourly time frame charts, again with the reduction in volatility, because even over here the volatility has shot up, then maybe you can fancy your chances as a short-term trader. Even you can have a look at Maharashtra Bank and maybe even at SBI. Now, going ahead with the private banking pack is looking a bit different. You can see the PSU banking chart is overbought and it's consolidating. Private banking pack, on the other hand, it's not overbought, it is consolidating, and it is not looking that great in the weekly time frame chart. In the daily time frame chart, although we can see that we have seen some great pullback, and there is, as of now, only one stock which is looking very much interesting to me, and that's HDFC Bank. HDFC Bank in the weekly time frame chart, it's not that great, but in the daily time frame chart, if you just have a look, there was a result which came up on Friday. So how it will react on Monday is very, very difficult to say. But if you have a look on the hourly time frame chart, if this gap is filled and if the momentum continues, you will see some fireworks happening on the Monday, Tuesday, or maybe Wednesday in this particular stock. But unfortunately, there was a result. And as a short-term trader, I always say that whenever you have a result coming up in a particular stock on that day, or maybe 2 to 3 days prior, you should avoid taking trade in that stock. Energy pack, I would say that period, it's consolidating in the weekly time frame chart, even in the daily time frame chart, it's consolidating, and in fact in the weekly time frame chart it even needs a bit of correction, but somehow prices are not ready to come down. Metal pack, if you remember, I had clearly mentioned that this is one of the sectors which will refuse to come down, and till the time it is within a range, I guess I shared this probably a couple of weeks back. I clearly told that till the time it is within a range and doesn't break its previous low, the prices will continue to move higher, and you can see metal pack has probably outperformed the entire sectoral indices and the entire market, and almost all the stocks they have outperformed and they have moved up pretty nicely. Now there is one stock recently which I came across, this JSW Steel. Now this stock has shot up in terms of volatility. Even in the weekly time frame charts, you can see a couple of candles over here showing negativity and one candle showing that it's pretty much, you can say, tired on the downside, but there has not been much correction. So looking at the weekly time frame charts, we are not getting any cues. Only one cue which I can get from looking at the daily time frame chart is the price is trying to bounce from this particular support band. It needs a little bit of consolidation. After the consolidation, if it gives a breakout in the shorter term time frame charts, I guess short term traders can keep a watch on this particular stock. Autopack. Now, Autopack, I can say that yes, the momentum in the weekly time frame charts is weakening. The trend continues to on the upside, and in the daily time frame chart, we can see that trend is strong, but again, momentum has come down. Even the volatility has increased a lot in the last few months. Now, if you see few of the stocks in this particular sector, you see Ashok Leyland, if you see Bajaj Auto, many of them are consolidating. Maruti is one stock which has tried to give a short-term breakout, but unfortunately there is a result coming up. So I always say when you have a result coming up in a particular stock, you should stay away. So looks positive on the chart, but how it will react on that day is very difficult to comment. So I will leave it aside. Although there is one stock which I have been commenting on is Bharat Forge. It looks pretty all right in terms of the daily time frame chart, and it is consolidating. It's trying to bounce back from a good trend line support. If it gives a breakout in the daily time frame chart, then yes, positional traders should keep watch on the stock. Going ahead with the finance pack. Finance pack again looks pretty much similar to the private banking pack. Rise of volatility, immediate rise of volatility needs some consolidation. After the consolidation, if this gap is filled on closing basis, then yes, momentum will continue on the upside. And do not forget, we have a weekly gap also. Consumption index, I would say that the trend continues to remain on the upside, and the trend and momentum both are disconnected because we have a higher high in price, lower high in RSI. So trend and momentum are pretty much disconnected. And in this particular sector, I would say that short-term traders should keep a watch on it, but there is a big but over here. Just be careful that there was a gap over here, and now there is a resistance even from a candle wick. So only if this particular space is filled up, then maybe we'll see some momentum going on the upside. Now, looking at the FMCG pack, it's pretty much clear that you can see some sideways movement happening in the daily time frame and in the weekly time frame chart. So I'm not interested to have a look in this particular sector. Infra pack, I would say again that we have higher highs in the price in the line chart, lower highs in the RSI, negative divergence visible in the weekly time frame chart. But as a trader, yes, some sort of bounce back is expected. But before this bounce back, a consolidation is important, and stock picking has to be very, very proper because the previous candle was an inverted hammer. Then we have a hammer. So it's total like contradictory, bear versus bull, something like this fight is going on, and this fight needs to be resolved. If this fight is not resolved, then making money in this sector will be a little bit difficult. So your stock pick has to be pretty much bang on. IT pack. Now, looking at IT pack, it's very much visible that it has outperformed. And if you remember, I had clearly told that once we close below this low, the downside momentum will continue. And once we closed below this at 34,427, we tested almost 32,858.58. Now, almost all the stocks in this particular sector are looking weakish, especially Infosys has reacted pretty badly recently. It could not even hold on to the support. But if you have a look at the sectoral time frame, then in the weekly time frame chart, yes, the trend is flat. It's not looking pretty much interesting. But one thing is visible that we have been able to correct its previous trend, and we have been able to retrace by almost 61.80% Fibonacci retracement. Now the question is, are we going to bounce from here, or are we going to continue going down further? If we continue to go down further, then I think it'll be really bad for the IT pack, and IT pack might remain weak for a little bit more amount of time. So next week's price action, in next couple of weeks price action will be very, very important for the IT pack. Talking about pharma, you can clearly see that pharma is also tired. The trend is on the upside, but the momentum is not in sync with the trend. And yes, we have a small doji over here, but it is also very, very important that the pharma pack does not close below this low. If it closes, then yes, we could slip towards this particular level of 17,827 or maybe somewhere around 17,604. And in the entire pharma pack, like I have clearly been saying since pretty long, that I'm just liking one particular stock right now in the pharma pack. If you have look at Apollo Hospital, or if you have a look at Cipla, even Cipla has corrected, Dr. Reddy has corrected, Sun Pharma, which is, you can say, a leader of the pharma pack, even that has corrected. Only one particular stock has not been able to correct pretty strongly. That is Oro Pharma. Oro Pharma has given a breakout on the upside, but after the breakout, it has retraced and it's now consolidating. If it continues to consolidate and doesn't break possibly 1040 or 1050, and then if it starts moving up ahead, then I guess we'll see some upside momentum in this particular stock. Otherwise, even Oro Pharma could underperform. So as a sector, there is only one stock right now in pharma which looks pretty good enough. PSE sector. PSE sector, again, there is pretty much disconnection between the price and the momentum. So as a swing trader, as a short-term trader, yes, I would like to go for some stocks, but you have to be very, very careful with stock you're picking. Realty pack, I guess, again, there is a very, very big disconnection in comparison to each and every sector, because we have three different higher highs and three different lower highs in RSI. And if you compare that with the momentum and the price, there is a pretty much large disconnection. So as a trader, yes, you can have a look at these realty stocks, but you should also understand that you can only watch these stocks with a thought process of a swing trader, not a positional trader. So you can have a look at Godrej Industries and IB Real Estate, but only at one particular condition, that they need to consolidate at least 2 to 5 days. And after that, if you have a breakout, until that point of time, if market also doesn't break recent lows, then we'll see some upside momentum in this stock. Mid cap sector, large disconnection between the trend and momentum. We can see a big hammer, fine, but we also need some consolidation, because there has been a sharp rise in the volatility, which is visible only in the hourly time frame chart, not that much in the daily time frame chart. You can see the volatility from 141 has shot up to 320, which means it has all more than doubled up. So if the prices wants to go higher, they need to consolidate pretty nicely, and only then we'll see some fireworks. Again, we have a gap over here. So trading in mid caps is certainly not going to be easy in the next few days, especially for the short-term traders. So again, coming back and summing it up all, I would say that it's nice to see the markets have bounced back. But just by one day's up move, we cannot decide what's going to happen ahead. Plus, war situation is going on. Result season is going on. And again, you can say that election is going to come up very, very soon. So stay light on your portfolio. Yes, you can continue trading, but be very, very precise about your stock picks. Do not over leverage. And yeah, keep ongoing, even your ongoing trades, the number of trades which you initiate. Like if I say that if you can see 4 or 5 good stocks where you can initiate swing trades, I would only initiate 2 to 3 trades, because if I'm having lower number of trades, and if suddenly there is a jolt in the market, if suddenly market goes for a toss, then taking a decision and immediately exiting all the trades will be much easier for me. All right. So I hope this video has helped you to understand how markets might move in the next few days. And if you find this video interesting, then do let me know by your comments below. And you can subscribe to the channel and even hit the bell icon so you can stay updated with the market views. Take care, guys.